Hello guys, glad to have you on board. We have to make an update as we've been following that trade since the entry and we've been managing the risk all the way through it. And to remind you, we've been 4-step in the entry trade. We've had the early validation levels when we basically entered right here, validated when we had that bullish breakout confirmed, got back to potential and validation when we broke down right here. As I said, I don't think that is a viable signal, so I remained bullish inside that market back then. We've been waiting for another validation by that new bullish breakout after a taking profit pattern. That one was pretty much much more reliable than this one, and I had much more confidence in this one, which made me triggering a reinforcement up here when we broke up that resistance. For now, let's set things straight. I said that early Monday. That trade is now out. It's been stopped right at break-even entry, so it's no gain, no loss for the reinforcement. So I have to switch back to more bearishness. It's not necessarily bearish. I remain bullish. I still have the early entry trade we had back then. It's switching to nearly positive negative entry. We're back at the entry price, but that trade is still ongoing to me. I don't see it that big of a risk right now, and we're going to highlight what the potentials are, but let's set things straight. The early validations we had back then are no longer in place, which means we are back into speculative areas, which means the reinforcement positions has to be taken out to accordingly assess the risks. Risks is increasing as I get back from validation into speculation. So lowering the leverages, putting the stop losses away, getting back to speculative meaning trading, and that means stop loss is now back to the support area, and I'm back into a wait and see price action kind of trading. So what we have right now, I'm just basically applying a strategy once again. When you see volatility into markets, you just don't want to jump into trading and emotionally buying or selling, just nothing close to this. First reaction you should have is applying the strategy. So this is what we're going to do just right now. So first thing first, now that we've had bullish signals down here, up here, and we've invalidated those as we had a bullish signal and we clearly broke it down, so it means we found a resistance in here. So now we clearly have a resistance in here, a resistance that the signals and the indicator were unable to get. Because remember, no indicator in the world will ever be perfect. And sine wave is looking at cycles, and what it's doing right now is what we call the mean reversal. Just like we had back then, it's something that sine waves enable to catch up in prices. Because as you look in here, the market is cyclical and it's cyclically bullish, and at some point we've got something that we call the mean reversal. The market switched back to bearish trend out of bullish signals, and it gives you no clue about that, which means sine wave is basically wrong-footed instantly and is completely lost, which means it cannot give you any signals out of this. So we could be in some similar signals that we had back then, but the scenario is quite different, and this is what we're going to highlight first before getting into much more details. It's the fact that back then we tried to build a support, we tested that support again, and then we tried to extract bullish and found that mean reversal that pushed us right back to the previous support that was already tested. And remember, once the support is tested, it's generally not working twice. So this is the reason why back then we broke lower. And I don't think that we're nearly doing the same right now for that specific reason. The scenario is right now pretty much different. We have an underlying support in here that hasn't been tested yet. This is the one we're currently testing right now, but we do have a lower support area down here with a validated breakout, which means in here bulls were in control. And as they were, it means that those who want to buy in here knows where to put the stop loss. Okay, so there's a risk management kind of trade in here that might help us find more bullish support in that area than we could have had back then. So the scenario is kind of different, even though the signals are suggesting heavy risk of a wrong footing market. So according to that risk, any reinforcement has to be taken down and out of the market, even if that means taking a loss. You need to reduce the leverage right now according to the underlying risks of being in a wrong footing kind of market that will basically chase all the stop losses and fuck you up. If that's the case, you don't want to lose it all. You take partial losses or exit at break even, just like I did, and I will take a tiny loss on the previous entry I've made back then in here. If I'm right, it's right here we've been entering. If I remember, yes, it was $6,433 to be precise. So this is where we've got in, which means that if for some reasons the market were to invalidate, we're about to invalidate and will break down that trend channel and all the supports we have out here and go into vertical stop loss chasing kind of price action, I'll give away my stop loss, but that wouldn't cost me a lot. That's what's important. Remember, trading is nothing like being right or wrong. It's just not losing that much when you're wrong and gaining the most when you're right. That's all it is about. Remember, always keep that in mind. It's what makes you a trader out of a gambler. Anyway, so we have that cluster. We've been identifying that cluster since Monday, so you shouldn't really be surprised to see the price getting in there right now. The thing is that the difference between Monday and right now is that we had a bullish cycle in between, and it kind of changes things into a potential mean reversal. So more risks means you need to lower your exposition if needed, need to take partial losses. Not meaning the scenario is fully invalidated, we're nothing close to that. So you still need to remain bullish, but far less bullish than we were a few hours ago. It's just this, managing the risks and getting back to speculative trading. And that's what a trader is doing right now. That's what I'm doing right now. Anyway, so applying the strategy, we've been building in new resistance in here, which means we need to update the scenario. So resistance now is there. Okay, previous resistance was down here, still kept that level, and then we've built a support right here, which means we've got resistance, and support. We can basically highlight and we can basically use the strategy. So here we've got support. This is where the bulls can put the stop losses below the support. If we go there, you obviously need to trigger the stop losses. It's not even a question, okay? So out here, support area, if for some reasons we were to go down there, we cannot break it down, okay? Bulls obviously have to buy down here, otherwise it means no bulls, it means we need to trigger stop losses. And that's part of the game. I mean, when you speculate, it's not going to be 100% winnings. It started well for us, but now it's getting back to danger. So bullish, bearish, bearish, what do? We simply build a trend channel out of the two market tops down to the market bottom, the market support, and it gives us a trend channel. And as you can see, we're still inside that channel. We've been breaking the mid part, not touching the higher one, which means we're getting to the lower boundary support. And normally that support is supposed to hold. As long as it isn't broken down, I can consider it valid. We've got horizontal support in that area. I've got bullish signal in here, double bullish, got blue triangle confirmed by a bullish momentum, and we broke higher, which means we got temporary support in here. It's the one we're testing right now. We've got support here, and we'll see how this plays out. It's not a big support as we haven't triggered a bullish signal. All we had by then is a price reactivation. So this can be a support, but we have to test it and work it out the bullish side. If that's how the market is doing it, then I'll get back into bullish trade. And the reinforcement I've been taking back then, I'll put it back in once again and trigger and target the price to get back to resistance. In here, if this is what the market is about to do, we're going to make a new update that we'll call back to validation. If the price is reacting bullish in here and getting back to resistance, in here I'll take validation again, which means I'll take one more reinforcement up here, and then we'll target the upper boundaries of the channel we'll have built. The channel will needs to be updated in between. We'll talk about that, because if we build up a new support in here, then we'll have probably another trend channel looking probably just like that. Okay, Remember how to apply the strategy. The technical framework in here is just basically, as the market moves on, you update your trend channel and your trend lines. From what I can see right now, we also have that trend line that I think needs to be built on your, needs to be put it on your charts. So bear that in mind. Whenever we get back to that resistance, I think that this is what we can consider getting back to price validation. But we need to see some bull strength in here. We can slip slightly through that level, but we shouldn't get that far from it. The thing is that the lowest level we had on the previous week is down here, and the market may just try to chase some stop loss right below it. So don't be really in kind of in end of the world kind of scenario if we're just trying to make lower shadow candles down here. This is, as a volatile market, I wouldn't necessarily be surprised if the Bitcoin was trying to trigger some stop losses down here. It really is, if we have something like that, like copy pasting this price action, if we as we just fall through the support level and not reactivating at any kind of point, if that's what's about to happen, first, I will remain bullish as long as this support is holding on, but that wouldn't be a good choice. Okay, that wouldn't be a good sign. We've got multiple support, and we also have this one that could be the one the market could take down. This is 6,120. If for some reasons the market were to go down, it would just be testing back that level to build what we call an head and shoulder pattern. So that wouldn't be end of the world kind of scenario to go just there. It would just be building the final shoulder to get a bullish reactivation pattern afterwards. So all I can say right now is that invalidation must get back there, and regarding this, it means the stop loss has to be put it away, which means the leverage has to be adjusted accordingly, which is what I just did. So I'm not panicking at all, nothing close to this, and just adjusting the risk regarding the new underlying pressure we have on the charts. Then second thing you need to do is walk back to the major time frame. And this is where things might get dirty. Because if you have a look at this, this is what we've been fearing, and I've been warning you about that since Monday. The fact that we had an oscillator bearish crossing out of a dangerous momentum, bearish divergent momentum, still below the resistance. So if today was about to close like that, that doesn't give us much of a choice. I mean, tomorrow obviously has to be a bullish day. We can close like that. It wouldn't be good. Actually, it would be really stressful to remain bullish overnight, having that candle close like that today. But that doesn't mean this is the end of the world. Because if we do have this, as you can see, we don't have bear OK on momentum. The previous bearish signal was far before. So it's too late right now to use that signal. This is why the algorithm is not telling you bear OK. And regarding this, I don't take this as a valid double bearish signal, which means, first thing, that candle is not yet closed, so you can't consider this as valid until tonight's close. If the market is closing like that, then heavy danger and reducing the risks in the intraday basis was the only solution. But if we do this, tomorrow needs to be a bullish invalidation candle, which means we need to bullish engulfing that bearish pattern tomorrow in order to restore the bullish sentiment. And that's it. I mean, and in that case, we'll have a bullish momentum versus a bearish sine wave. And all that will mean is that basically sine wave is going to take this, report it to the upside, and guess what? It's highlighting the same price area. So we'll have a reported bearish target up here, and this is what the market will probably do. Reporting the bearish cycle, meaning that the market remains bearish, but sine wave will have triggered it a little bit too early because of that bearish candle. Okay? So don't go into heavy panicking kind of trading. Even if we close down today, doesn't mean this is the end of the world. Simply means that the risks are heavily increasing and that you need to reduce your leverage accordingly. But tomorrow can still be an invalidation candle closing above today's eventual candle, and that will be a strong bullish signal for next week. There's a final thing I want to share with you is the Bitcoin futures market. So it's BTC1 for the futures. And if you have a look at this, this is not something that I generally call a bullish pattern, a bearish pattern. This is typically the market creating head and shoulder pattern right here, as we had what we call an abandoned baby structure. We've been creating a downward gap day, and then we've gapped up the day right after, making a doji candle. So we left that candle alone, which we call the abandoned baby, and this is what we have. And this is generally sign of a very, very strong support area. So I think very strong support, bullish gap, and we're holding on that gap. We haven't retested yet since today. So today what we're currently doing is just retesting a futures gapping level. Two options: it fails, we fill the gap, and then the market is bearish, because that will invalidate the abandoned baby. Second option, we just fill that part of the gap and we find some strong bullish reactivation in here, and then the abandoned baby remains abandoned, and if that's the case, the market remains bullish. But if we get back to the abandoned baby, this is terminated scenario. I'll get back to bearish, and obviously the bullish attempt, counter trendy, will be a failure, and that happens. I mean, I'm no magician. I don't know what the market is about to do. All I do is assessing the risks, trying to find a technical framework that suggests I might be right, and waiting for a signal. This is just applying my strategy. Now, so after this, if for some reasons today wasn't that big of a bearish candle, and if we were traced upward today, or even just tomorrow, that will be a bullish sign to close that bearish gap, because I think generally you take the latest gap in time to be the strongest. So we've got a strong gap in here and weak gap in here, and the two are fighting each other. We're obviously going to fill the two at some point, but the question is which one is going to be the first, and to me, in terms of odd, this one is the weakest, which means we have high probability of just getting there, filling that gap, probably getting to the next resistance, and eventually afterwards getting to fill that gap and falling apart, breaking down the 6,000 once and for all. So that's my scenario. I can be right, I can be wrong. Once again, I don't know anything about that. I'm just trying to pull, to place the pawns on the chessboard. It's just like that. But right now it's way too early to consider targeting 8,500. All we have to work out right now is what we're about to do near that bullish gap. Either it's going to be a strong support or it's going to be broken down. It's the only question you might have in your mind right now. And as I said, trading is not about right or wrong. It's just picking a side, waiting to have technical framework, and waiting to have signal. I've been doing all those steps, so I have no regret. If that scenario was about to invalidate, then that's how it is. The market is not always going to give you gains, and losing is part of the scenario. So I wouldn't change anything if that was going to be invalidation. I would just do the same if the same thing was to be played later on another asset. I'm just respecting the strategy here. All I know is that generally when I do respect that strategy, I get more gains than the losses I could make. So if that's a loss, it's going to be a tiny loss. If that's a gain, it's going to be a big gain. That's how it is. So it's just waiting for now, getting out of speculative area to the upside to get one more validation and eventually reinforcements. Or second option, we get to invalidation, triggering the stop losses, and that's how it is. You knew about the leverage I've been using on that position, so don't worry if we have to get to invalidation. I'll tell you exactly how much I've been losing in here, and as you can see, as you will see eventually, that is clearly not that big of a deal. Actually, not at all. So anyway, it's too soon to talk about that. I think waiting is the only option right now. So wait for the candle close, see how it is performing, and if we can actually validate that new bearish signal, that wouldn't be a good sign for the bulls and for us. And it means that if this is what we're about to close like, we need to have a bullish candle tomorrow, or nasty things could be down the road. But anyway, no stop loss triggering until we remain above that support to me. So we'll see how this plays out, but I think right now we're going to probably work out that support area, and I'm just waiting to have the outcome of that cluster. Goodbye, guys, and see you later. We're gonna make an update tomorrow and the day after tomorrow and whatever. And anytime we'll get something happening in an intraday basis, we'll eventually make another one of those educational video, especially on the Bitcoin.